Well, are you able to make any sense of the markets at this stage of the game? We're trading in negative territory at this stage, and that despite a slight positive start that we did see creep through in the initial stages of this morning's trade.
Yes, it's been very difficult. I think this week has been very difficult in terms of the economic data that has been coming out, and I think the world economy is still very jittery. And yesterday the United States closed up, on the back of rumors about perhaps QE3 coming into play. But then also commodity demand is under threat because of the fragile state of the world. So us being a very commodity intensive country, that will obviously come in and affect us. So I think that's what we're seeing, quite a pullback. But if you look at US futures, also they're down. If you look at the United Kingdom, they're also down today. So I think it's just generally following the market. And we must also remember tomorrow is non-farm payroll, and that's a big number. The ADP numbers yesterday that came out was much better than expected, but it was down from last month. So it doesn't bode well necessarily for what's going to happen with the non-farm payroll number that's coming out tomorrow. Initial jobless claims from the United States are also coming out this afternoon. So I think there's a lot of uncertainty also. The ECB, the BOE announcing rates later on today. Also a bit of uncertainty. They want to see what the treasurers there have to say about what's going on, and what the bank governors have to say about what they perceive. But we expect no change there. However, it's just tenterhooks at the moment.
Yep, certainly the yo-yo trade that we've been seeing play out, intraday and during the course of the session, getting me tongue twisted at the start of the show, where it's really hard to keep up as to what the market's doing at any given point. We know it's trading lower. Let's perhaps start off with some positive news that's filtered through on home ground, though. We've got Able trading at top of the top 40 this afternoon, a 2.2% gain filtering through for that company, and that after it released its third quarter trading update this morning, saying that gross advances grew 28%, while credit disbursements for the 9 months to the end of June showed a 53% increase. What's your view on a player like Able?
Yeah, no, I think we're of the belief that it's more of a credit play and more, increasing that business. And the story is really on the credit side and the banking side of the business, rather than it is in earrings, on the earrings side of the business and the furniture retail side of the business. That was quite disappointing for us. I think the earrings brand itself went up about 15%. But however, Guinan Richards and Furniture City went down quite a bit. So they seem to be struggling. Their sales are not strong on the earrings side of the business or the furniture side of the business. But however, they did manage to say that 53% increase in credit disbursements. That's a very good number. And I think, we're just seeing some great strength on that side. However, the business, the two sides of the business are not necessarily working in sync.
That, of course, in a context where we've had the big banks really struggling with the loan growth. How does a player like this compare to your bigger banks? Of course, we had Nedbank itself, but ABSA earlier this week releasing numbers as well.
I think it's a different target market necessarily. They're looking for middle to lower income clientele, and so you have to look at that and see that they've got more credit issues to worry about. I mean, they are operating in the same environment, in the South African environment, where there's high unemployment or there's uncertainty of employment. There's general global conditions are also impacting their business. So so it's kind of difficult perhaps to compare, because they've got a different trading strategy as to what the other big banks have. However, if you look at it as Capitec against Capitec, they've grown quite considerably, but it's more of a trading growth than it is really an actual numbers growth. And it's good to see that Able is trying to manage it and trying to increase loan advances to people and trying to grow their business that way.
Let's take a look in the resources space. AngloGold Ashanti, the big one today, and despite a stellar set of numbers that certainly beat market expectations, we have that share price trading lower today, down 0.25%.
Yes, I think it's a very bad day today for AngloGold to have come out with their results, because it really is more of a global economy, trading than it is because of his company specific. I think the global market is not looking at company specific data anymore, but looking at economic data globally. And as I mentioned earlier, there's been a bit of a threat to commodity demand because of the fragility of the economy. But yes, AngloGold had stellar results. I mean, that's based on the high gold price. It means record highs during the period. I think that in the Q2 that they recorded about 9% increase in the gold price. Of course, it will affect them wonderfully, and as we've seen that translated. But they do have some issues in terms of wages and strike action there that they had to deal with, and also the flooding in Australia that affected production. So production is not necessarily where it should be, and I think they brought it down a little bit. Expectations for production down a little bit, but very, very good results based on all the other exogenous factors.
Probably more in favour is a player like Exxaro at this stage, and it out with a trading statement as well, saying that it sees a first half earnings, headline earnings per share, which excludes the zinc core impairment, coming in between 961 and 1,055 cents. Your view on a player like Exxaro, because it has run pretty hard over the recent past, Ntombenhle?
Yes, it has. Also based on commodity demand, and the coal price also helped it quite a bit. And I think also, Kumba came out with a trading statement a while ago. So I think the market extrapolated what we could expect from Exxaro, and also again affected by today's negative day anyways in the market. So we're not seeing that translated. I think they were down about 1% the last time I checked. So, but it is a very good trading update, and we're very happy to see that. But I think it's just affected by what's happening in trade. But yes, it has had a good run, and we expect it, when things start to calm down a little bit, for it to carry on with a good run.